course it is. That's spot on, Jeremy. It is always the paper market because that's just a trading market.
Yeah.
And since you and I spoke, look at how much of the physical market, because in the US, it's primarily just a digital market, a trading market. In Europe, it's been more of a physical market, but look at how much of that physical market was, and I'm going to use the term because I think that's what happened, repatriated back to the US from especially the Bank of England. And since it wasn't the Bank of England's gold, because they're not sitting on a whole lot of their personal gold, but they are sitting on a whole lot of other sovereign gold from countries around the world. So what gold did they ship over here to us? I'm thinking it was, and maybe I'm wrong about this, but I'm thinking it's a lot of that sovereign gold. What happens when the governments request their gold back? That still lies in our future. We haven't seen that yet, but that's going to overwhelm. I think, I could be wrong, but I think that will absolutely overwhelm the market's ability to hide the truth. And you can't go by the price that on anything. I don't care what it is. I mean, do you really think that stocks at nosebleed levels are a true valuation of what is happening in the economy? Because if enough governments request their gold back at one time, and we saw this a little snicker snack taste of it in 2014, 15 in there with the sovereign debt crisis in Europe, and a lot of countries at that time repatriated and asked for their gold back. And even the Federal Reserve of New York, when Germany asked for it, they said, okay, you can have it, but it's going to take us, I think, 6 or 7 years or something. It didn't quite take them that long. They got it back before that, but they had to buy a lot of time. And I think it's much worse now. So that lies in our future, but you need to have the physical metal in your possession, because if you don't hold it, you don't own it. Yeah. And if a government needs to do an overt confiscation in order to make that happen, they will. And if it's sitting in a retirement plan or something like that, where you're not holding it anyway, that's where most of it is in the US. Most of it's not held privately. Well, you're going to see that kind of explosion. And the truth will begin to express itself. It's not going to fully go there to its fundamental value yet. Yeah. That happens when they're attempting to regain confidence. Well, I don't think so. I mean, it doesn't for me personally, because I understand the true value of an ounce of gold, and I also understand its full functionality. Mm-hmm. Now, if it didn't have that full functionality, then I would have to say yes, because there would be no other way to accurately, ultimately value the gold and its importance in the market. And what I mean by that, because somehow Wall Street never really talks too much about how gold and silver are used in every single sector of the global economy. Mm-hmm. So you have the greatest functionality, but you also have the broadest base of buyers. When you're looking at trading contracts like we do here in the US, that's one area. And the private clubs that you're talking about, it is really about managing perception. Yeah. That's what it's about. And so there will be a rise, because there always is. I mean, we've had over 4,800 currencies that do not exist anymore. So we have lots and lots of examples. And at the end of the day, central bankers will use gold to attempt to regain the public confidence. And that is when you will really see gold start to move toward its true fundamental value. And that's based upon, the amount of debt that's been created, because this is money. This is fiat money. This is sound money. Mm-hmm. They're both money. They're just the opposite side of the coin. This is used in one place. This is used every place. Yeah. So what will ultimately happen as loss of confidence in not just dollars, but that would be true euros, yen, all of them, right? Loss of confidence in the fiat money system will drive the value, not the value, but the price of this, the visible price of this to its true fundamental value. But it will not happen until governments are forced to attempt to regain the public confidence. You know, maybe it's more truth because we are watching them accumulate, global central banks, meaning accumulate more gold than they ever have historically in the last 3 years. We also have central banks, especially the Federal Reserve, that are running losses. And I believe we are now in the 4th year of losses for the Federal Reserve. That's unprecedented. That has never happened before. Because how do central banks make their money? Does anybody ever ask that question? And it's actually pretty simple. It's seigniorage, right? It costs, well, this happens to be a $10 bill, but if there's a $100 bill, here's one, okay? It costs 9.4 cents to print a $100 bill, less to push a button and create it. Now, you and I have to work 100 times harder for this, but that difference between the cost of creating that money and the face value of that money is central bank income. And that's what they use to fund their operations. And whatever they don't use up in a year goes to the Treasury. And so we are now in the 4th year of massive losses at the Federal Reserve and their inability to transfer any of that excess to the Treasury. But look at how much new money they've created. Why are they in losses? The losses on what they're sitting on all of that debt that they bought at ZERP? But that's a little scary, especially as this whole situation begins to expand and more debt is piled on, and you've got the corporations that are now issuing these stable coins buying this debt. What happens when they have to sell it? These are not entities that are there solely to support these markets. The point is they've created more money than they ever have before. Their income is based on the cost of that money and the face value of that money. How in the world are they running losses? I don't care where they put it on their accounting books. I'm just saying, how in the world? I mean, and I don't hear anybody question this. I haven't heard one person question it. Now, of course, I haven't listened to everybody in the world. Well, historically, yes, the good thing about at least the data up to this point is that if through the Bureau of Labor Statistics, the BLS, I can go back and I can pull a food basket, then it's the same food basket, right? So I pulled it from 1913 to the last one I did, 1925, I mean, a couple months ago. And that food basket, and even though the BLS's numbers are sketchy, okay, they're what I can use for consistency's sake, right? So that food basket had gone up something like 2,500% over that time frame. Spot silver, manipulated as it is, was up about 3,000%. So that's why I say it maintains your ability to buy that same stuff. Spot gold, manipulated as it is up over 16,000%. So not only does it maintain your ability to buy the same goods and services, it actually expands your ability. Neither one of them reflect the true fundamental value, because a rising gold price as the primary currency metal would reflect, it does reflect, the falling purchasing power value of the currency. So governments have to keep it suppressed because they don't want you to understand what's happening, because then again you would make different choices. However, as confidence in the dollar is lost, then, or any currency is lost, then people are trying to figure out what they have to do to maintain that. So primary currency metal, and this is also the metal that they do these overnight resets. They do it against gold as the primary currency metal, which is indestructible, which is one of the reasons why it is the primary currency metal. Silver gets used up in manufacturing, so it is the secondary. And you know, I get a lot of questions on the gold to silver ratio, and initially, here, this is my 1/20 of an ounce $1 gold piece. I think you can see how teeny it is to an ounce of silver. So this is the original. And that gold silver ratio, I'm sure we will see it grow more narrow for a period of time. But as the hyperinflation kicks in and people become more aware of it, then what happens is it expands again.